Well, welcome to the National Real Estate Cafe with Don Getling and Gino Franti, where we're always busting myths about mortgages and many more things. But today we're going to talk about mortgage insurance. It's not the devil.
Yeah, because, okay, the key thing is, before we even go to the slides, is mortgage insurance. You're going to hear, like Gino said, it's the devil. I don't want mortgage insurance. But remember, back in the day, we won't say what day that was, but you didn't have mortgage insurance. Therefore, you needed to have as much as 50% down, minimum 20% down to just get into a home, meaning for a bank or someone to take the risk to give you such a huge loan. This is a big loan for you to get into a home. Now, thanks to mortgage insurance, you can get in as low as 0, 3.5% down,
3% down, 5% down.
There's so many options now, 10% down, but there's ways to configure the mortgage insurance. Now, the key thing that we want to talk about today is a lot of lenders will go out and go, well, just get mortgage insurance. As soon as you get 20% equity, you can just get rid of the mortgage insurance. And you'll probably have that tomorrow, the way houses are going up. Careful. So let's go to the first slide. Here we go.
And I don't want to bash on the banks, but I'm going to say the banks and the discount lenders, internet lenders, and those types of people are going to be the most likely to utilize this mortgage insurance strategy, which is monthly mortgage insurance.
Well, some of them don't know anything else.
That's right. and here's something else to add to that, right? So monthly mortgage insurance is what you're going to be most likely looking at. Not all monthly mortgage insurance is priced the same, so be careful with that as well.
Yes, because they may only have one mortgage insurance company they're tied to, where one could be cheaper than the other based on your particular scenario. It could be your debt-to-income ratio. It could be, which we're going to go over in future shows, so pay attention to that. Debt-to-income ratios. It could be your credit score. It could be their down payment. There's so many factors that contribute to how much mortgage insurance you pay. So make sure you work with a lender that has other options and other mortgage insurance companies to work with.
Yeah, so moral of the story is, if you're looking to put 20% down or less and you're going to have mortgage insurance regardless, make sure you're getting more than just one option for mortgage insurance. Say, what mortgage insurance options do you offer? They should offer you lender-paid mortgage insurance.
Right.
If they're more advanced, they can offer you a single premium mortgage insurance. And if they're really advanced, they can offer you a split premium mortgage insurance, which almost nobody will offer you.
All right. Or a HELOC on the back end to totally avoid it based on your particular scenario. See, one reason we bring up this slide here is a lot of them say, don't worry about it. You can get rid of it as soon as you hit 20%. It's not that easy. It really isn't. One, it says 20%. Really, it's at least 22%. And then there's a lot of work to go behind it to make that happen. And
well,
be careful.
Here's the key. 20% on the original property value, okay, but not the new property value. So yes, if you were to pay down your mortgage to 78% of what your original loan amount was, boom, it's going to go away.
Yeah, but a lot of them tell you as soon as it goes up by say you put 10% down, it goes up by 10%, you can get rid of it.
No. Minimum of 2 years of on-time payments in order for that to happen, and then you have to petition for it. You have to get an appraisal, and then lo and behold, your loan got sold right in the middle of that process. Wonder how that happened.
All right. So the moral of the story is, when you're working with a true professional, look at multiple options when it comes to mortgage insurance. There's ways to avoid it. There's cheaper ways to do it than possibly, like Gino said, lender paid may be cheaper than monthly. Monthly could be cheaper because you have a high FICO. You never know. But make sure they break them out so you know your options. Say, is there more than one option? If they say, no, this is it, look at other lenders who will give you other options. Right,
Don,
Gino?
let's make sure to do a whole show on mortgage insurance on our radio show, so that you could go to donandgino.com, go to the YouTube channel, search mortgage insurance, and we'll do a show that talk all about it.
Let's do it this Saturday.
All right, sounds good.
All right, you heard right here in the National Real Estate Cafe. You can get these sent right to your phone by texting NREC to the number 58885. Find out more at donandgino.com.